Hello everyone. In this video I want to talk a little bit about volume index, provide some basic information on this indicator in hopes that you guys are a little bit more informed with respect to this indicator. So let's begin. Here we have the zero line. That's one of the components. There are four components. This is the volume index weight line, volume index trend line, which is this red or turns yellow or in green, and then the white line is the volume index itself. Now I'm losing my voice a little bit, a lot of screaming in the office today, so uh, just bear with me. I'll try to speak as loud as possible. Now, instead of going over all four at the same time, let's start with the zero line. The zero line, when these three components are below the zero line, then the market tends to be bearish. Now, reversals do occur, and when they do, and what I mean by reversals, I mean by major intraday reversals do occur when these three components are below the zero line, especially moved really far away from the zero line. So just keep that in mind as well. However, when these three components are below zero, bearish bias, above zero, bullish bias. In terms of getting into reversals, that's going to take me a lot longer to explain, so I won't do it on this video, and I'm tempted to do it, but I won't do it on this video. But there are ways how to figure out what reversals are with this indicator, and I'm almost tempted to talk about it, but I just know that there won't be enough time, so let's leave that for another time. So the three components below the zero line: bearish, above, bullish. Okay, and the next component is the volume weight. The zero line is fairly simple, so we covered that. The volume weight. This has we designed it to have several uses. One of it, so we want to have the bias of the market. And when we say bias, don't confuse that with trend, because trend and bias indicators are completely different. A bias indicator is a slow indicator and gives you the bias. A trend indicator will give you the faster, that will give you the faster information. So here we gap down, and gap downs generally will have some bearish meaning to them, but as we've seen, and you guys I'm sure as well, they can get filled and market could just continue to move in the opposite direction of the gap for the entire session. So the question is, gap down right at the beginning, what are we looking at? And as you can see, if you go by the volume weight, keep you on the right track more often than not. And so that's what we mean by bias. It also has another use, which is all the major moves will occur when the volume index itself, and keep in mind that's this white line, is in proximity to the volume weight, as it is here, and corresponds with this major swing point. Okay, here with this swing point, not a major swing point, but a swing point. And as we move down with price again in this area here, so it's very important to keep this in mind. And again here, okay, this gives us context. That's the value of it. It gives us context. So we're watching price action. Okay, where are we with respect to volume weight? We're down here. Okay, so the only thing that could occur is a reversal move. But if we wanted to look for a major swing point in the direction of the volume weight, then we would have volume weight, or as I said, this is a bias indicator. In the direction of the bias that the volume weight is telling us, then we need to wait for market to move up to in proximity to it, as it did in this area. And that's basically its value. Because without that indicator, what is your reference point for this swing point, that swing point? If you have one, that's wonderful. Just explaining this indicator. Okay, and it's not the only way that you can have this type of context. So I'm sure you guys might have some way of having this type of context, and that's wonderful. Okay, again, let's move on to the next day. Gap down, like the similar day, except this time price action does the opposite thing and continues to move. Let's look at the volume weight. It's a bias indicator. Okay, it was in the direction of this move, and the market indeed moved up. Okay, and as day goes on, and as I said before, that intraday reversals could form, Okay, and price action started making lower lows. We came to proximity this low, lower low, higher low, break. Okay, and where did that occur? In proximity of the volume weight. Okay, and that's the value of those are the two different ways that we use the volume weight. There's one additional way that we'll use it, and I'll discuss that in just. I want to just quickly look at this next day. Again, we have a gap down, volume weight, bullish bias, gap is filled. We test, we come to the proximity of the volume weight, market moves in the direction of the bias. Now, not every single time we'll test, and if there is a reversal going to take place, then this is what it'll look like in this area here. All right. Come down, move up. Market looks like it's trying to move up. Then we stall at this double top here. Still, we need to monitor price action. We break below it. Okay. Now you're getting a good idea that okay, we've moved far enough. We come back again. Guess what? We test. Okay. Proximity. We touch the volume weight. Big moves occur in proximity to the volume weight. And there we go. So that's the two ways that you can use the volume weight. Okay. Now, in terms of trend, and that's where the volume trend indicator comes in, and that's this line here. So when you can simply just say volume trend is red, bearish, volume trend is green, bullish. Now you can take it one step further. Volume trend is red and it's below the volume weight, then that's taking it one step further, providing you with higher probability trend analysis. Volume weight is green, however, it's below the volume trend. Okay, you can, for example, if you decided that you want to go long in situations like this, then what I would suggest doing is either use support and resistance. In other words, say, okay, these are reversal trades, so I want to be a little bit more strict with these type of trades. So use some kind of support support resistant method. So say, okay, this is support, and volume trend is green. I want to take a long, but only on my support. Okay, so just take it on your support. When you do wait for the volume trend to be less than the volume weight, then you get these type of moves. You go short here, and you are able to capitalize on these type of moves. And that's why I said that it's a higher probability when the volume trend is less than the volume weight. And so that's the third way of using the volume weight to your advantage and to doing trend analysis, or having a method to use as context to determine where the potential for a major swing point to occur is. And so this is the basics of this indicator and how it uses it. It is a trend indicator, but as I showed you, you can take it much further beyond a trend indicator. By itself as a trend indicator, excellent trend indicator, but again, you can take it much further than just a trend. It can give you context, give you heads up to where the major moves when and where they are going to occur. Okay, if you guys have additional questions, send us an email. Thanks.